All right, so welcome everyone to another weekly macro discussion. Our goal is mostly to figure out where markets stand today. We do have a few topics about macro in terms of the interest rates and what's going on in the Fed world and what are the parameters to watch, especially around yields. What are the key concerns which we are watching carefully in terms of data points. The second thing, which I think a lot of people have been asking about, is the expansion of treasury companies. It means we have been pretty big, big into some of these Bitcoin treasury companies. We have been analyzing them for years, and now we are seeing a lot more altcoin companies coming. And it's crypto is actually entering a bit of a, we can say accelerated accumulation phase. So we are going to discuss a little bit around that. But before we jump into those, let's start on the markets. And as we always do, we will start looking at the charts and we'll look at where markets are. So let me just share my screen and you let me know if you're able to see that. So I think I have not edited much from our last discussion 2 weeks back when we were actually at the start of the correction, which we were. So this is why I maintained this previous all-time high. You see, it's not matching with a new all-time high. So since then, we have actually hit new all-time highs. So that correction did not materialize. We did discuss that day 2 weeks back that we are going to probably this. It's very difficult in a money flow situation to have a deeper correction. We were still expecting somewhat of a test of some support levels, and it did not even give us that. So in other words, this correction was just lasted a couple of days. It did not really work out, and markets are really in a pretty significant up move. Now, with this new move, nothing much changed actually. Even the new high is pretty close to the previous high. So I think the analysis remains same, means market is still run up huge. So what we talked about 2 weeks back, and we were assuming it's a start of correction, which did not happen. We may have a correction, or we may continue making new highs. So there is no clear direction from a charts right now where we are, because as we know that we are in a blue sky zone. We have just made new highs, and individual components are doing better in terms of, we are seeing rotation. We saw how Apple and some other companies which were lagging behind are now coming to the party and so on. I think ultimately everybody's talking about how tech stocks are driving the rally. We did talk last time that we had a 45% rally. Now we are probably, I've not calculated the new numbers, but it's another 200 points. So basically, we are still sitting on a huge rally from April. And this was, we had been tracking this whole range about previous all-time highs and new all-time highs on NASDAQ. And remember, the SPX, as we keep discussing, has a huge component of tech stocks. So NASDAQ is actually driving the market in other words. Most of the known tech companies and SPX are non-contributing and they are not really doing much. So overall, nothing big from the charts other than the fact that we are sitting on a huge rally. The correction was pretty small, and we are probably going to continue scaling up till we hit any kind of headwinds. And coming back to what is really changing is, of course, the yield. So this is one thing I wanted to talk about, and this is one of the topics which we have to discuss today. Like what can change? Like if you remember earlier, we had this whole idea of the yields are falling because inflation is coming down. We had a lot of other, positive data, or let me not call it positive, negative data for employment, which was taken positive by the market because of the expectation of rate cuts. So now, assuming that is the tailwind, now what you are seeing, why the yields are going up, that the PPI, which came out this week, which exploded, like, PPI year on year is definitely going up now again after dropping hard. So some of this analysis I'm taking, like mostly people are worried about this monthly number. Of course, if you look at 6-month average, it is still trending down at a bigger scale, which is what I think inflation was coming down. Now, this number came up for multiple reasons. Of course, the tariffs was the concern, and tariff is definitely impacting this. But if you look at some of these analysis which has come out, most of the new what we call it as the services PPI, which is less dependent on tariffs, has been spiking up, which is kind of a concerning thing for Fed, because what will happen is this is not even yet tariff impact. This is more about the services sector side and services premium. Like some of the parameters, I mean, of course, people have some different analysis. Some people are talking about portfolio management being a huge thing, which doesn't make sense. But again, those are some of the things which are contributing. So usually one thing you will notice here is that PPI is very kind of noisy. If you see, it's not unusual to have PPIs which are much higher than like previous month, and suddenly after a huge jump it drops down. So this is why what I would like you to focus on is the 6-month average. Now, when 6-month average is not spiking as much, and we might see next month data coming down. So what that means is right now, the smart investors are not changing their bets on rate cuts not happening in September. As you remember, we were talking about after the low inflation number, and especially that in unemployment report, the probability of a rate cut was 95%. Even though after the hot PPI, it has come down, but it is still almost 90%. So in general, what we are saying is there is really not a different expectation anymore. Definitely the inflation numbers will matter. Definitely another PPI will be coming before the next mid-September meeting. So, but overall, what we are highlighting here is that if rate cuts are still on the horizon, we are probably entering a rate cut cycle. And we are also expecting Trump to announce a new Fed chair, which we have been talking about, right? That they will be creating some sort of a soft pressure on the yields by signaling more and more rate cuts as Powell exits the office. So overall, I think 2026 and end of 2025, we are looking at rate cuts. And I think the yields are just reacting to potential tariff impact, to potential PPI impact, and so on. But it's still way below where we were earlier and out of the concern. So till we don't cross 4.5% or try to break down this trend, which has started like as early as January, we are on a downtrend. I would not worry about this creating a headwind yet. I think other than that, we have already discussed last time the earnings and so on. AI trade is still hot. We have seen Nvidia, Meta, everybody going up. I think Apple is one thing which people were concerned about, which has turned around because of potential deals on exemptions which they got with after the Tim Cook visit to Trump's office and all that drama around the golden phone and so on. But basic idea here is that yes, the Apple was a concern, which was a big cap. We are looking at Nvidia's and of the world and Microsoft of the world hitting new highs. So all these are contributing to continuous up move, and we are still living in the AI world. We are still living in a AI boom and AI spending. We do have later this month we have Nvidia earnings, which mostly are priced in terms of if you see the run up in Nvidia. I would say it can definitely impact the markets if earnings even beat the market. Now they are clear on China shipping also, so they might actually guide well also. So in general, I think a lot of positive news can come out of it, or market can also react negatively if the expectations are even bigger, because there is always this whisper numbers of better expectation than what average analysts are saying. So you never know how the reaction will be, but I think that's where that will be one big event remaining on the earnings side, while the tailwind of macro is still there. For example, as we always discuss, the money supply. Let's look at this chart from early 2025. And this is the global money supply. We are talking about the yields. So everything is pointing to softer and softer data. We are sitting on a 4.25% interest rate, which we are entering a new rate cut cycle. So overall, there's a much higher chance that we have more and more money coming into the market. We did discuss SLR relaxation is already opening up the doors. When you have rate cuts coming and SLR is relaxed, imagine how banks, who their goal is purely to make money, and it always makes sense to go and buy more long-term bonds and collateralize them and start giving out more loans, because you know that now the risk is gone from yields going up and interest rates are on the way down. So that those kind of things will happen, which will provide a lot of fuel to the market. On the other hand, as we discussed, that we are sitting on a hot market. So it's a matter of, yes, we are in medium to long term, everything's pointing to more bigger highs. In short term, just like we had a correction early August, any news can trigger a deeper downfall. So that's how markets work. So I will just give it a break here and let people ask questions. If you have any, you can put it in the chat or you can unmute yourself. All right. So I don't see any questions yet, so you feel free to put in your questions anytime. So let me get to a quick look at Bitcoin. So this is going to be another topic which we'll take up a little later, but let's look at the chart. Like Bitcoin has made another new high, just like SPX recently. That's a couple of days back. And since then, of course, it has corrected. So volatility is part of the game if you see how it has been. So right now, in other words, it's very simple. It broke out of the previous all-time high, which was 112K. We are still sitting there. If you remember last time when we had this call, we were talking about testing this zone, and we actually tested this previous all-time high perfectly, while we had not done that yet when we had the call on Friday. So I think we are in a new cycle. We are trying to find the new high because we did try it, like we did 123K, we got or went all the way up to 124.5K. So all this is part of the price discovery blue sky zone. What is driving it, of course, is a huge demand from treasury companies, huge demand. Like there are at least 10 treasury companies being announced every month right now. And it's not just US fact, there are treasury companies coming in Singapore, in UK, in Japan, and so on, even in Brazil and so on. So I think you will see more and more people now trying to create this, and we are getting to the next stage of Bitcoin becoming that corporate asset class. That's the only reason why I think the demand is continuously increasing even at this price. And we believe at Proflex that it's still very early days. Like it's very, very early days of this new demand, which is at a much higher scale than what retail can provide, because you're talking about the asset classes like whether it's fixed income, which backs the corporate market, like corporate debt, whether it is preferred security, which MicroStrategy is using, whether it is all, and in general, the way they have structured this as a new asset class, it is backed by Bitcoin. Bitcoin is being seen as a gold, like we see Scott Besson going on CNBC talking about, when somebody asks a question on gold, he always points to Bitcoin as the 21st century strategic reserves and so on. So in general, I would say the whole cost narrative is every day being strengthened about digital gold. And as corporate treasuries find it easier and easier, like gold was never an easy thing for corporate treasuries to own, but Bitcoin being so well institutionalized by custody companies like Coinbase and the ETFs and BlackRocks of the world, it's becoming a very fast adoption cycle right now. So we do expect this to continue. It is going to be consolidating. Like again, corrections are common. I don't think this is going to change because the whole thing moves around OTC markets, and a huge buybacks coming every week. A lot of money is coming into this market, so there will be price moves, big up moves and down moves, and that nobody can control because you're talking about people sitting on huge wallets which have hundreds of thousands of Bitcoin from 2013 or 2012 or before. So those become active. It's very common. It happens in every cycle previously, if you go back 3, 4, 5 years. And that is going to be the game here. Means volatility is actually the strength of these strategies which people are building, and that will continue. Same thing for gold, I would say. Means we have seen the consolidation still continuing, nothing new. We are seeing some upward bias because definitely it's making higher lows. And the slope of when we look at this consolidation range, the slope on higher lows is much better than the resistance line. But overall, I think it has to break out of this consolidation very soon. So we are watching carefully whether it keep making new highs. That's a technical scenario on gold. But overall, all the assets are ultimately looking to move up. And the logic is very simple that we have been talking again and again in this macro call, is that the money supply is increasing, the money is going to be relaxed. Like remember that what we should not miss out. So one simple message I would like to say is we should not miss out on the fact that we are at the end of a very, very tight monetary cycle. We are sitting on very high interest rates. Of course, in recent memory, means of course, some people might remind you that 20 years ago we used to have much higher rates, but we are not living in 20 years ago. We are living in a modern world which in recent memory only remembers 0% rates. Now, when we are talking about 4 to 5%, it was a great stress test for the economy. We are still seeing corporate incomes high, of course, maybe concentrated to the tech companies. But what we are saying is the tough environment is still leading to high markets when we are looking at SPX being high, Bitcoin being high, gold being high. And that's all because the whole idea of a tough monetary environment was only from a perspective of interest rates, but money is still being pumped because all countries, whether it's US, whether it is Japan, whether it's China, they are creating more and more money. So there's no point of showing tightness with interest rates and killing the small businesses while people, like in general, the money is still getting pumped into the economy. And that is why you are seeing asset classes at high levels. It's nothing to do with, means now if you further add on top of this money supply, which is already in the system, if you add lower interest rates as the rates are being cut worldwide already, US has stopped the rate cut cycle after last year, but rates are being cut worldwide right now. So you are entering a easing cycle. So it can only get better from here for assets. So that's overall the big picture view we have. Of course, that doesn't mean that it cannot correct tomorrow or next month by 10%, but I'm talking about medium to long term. So that's a summary on the market. And let's see, I see some comments here. So we did talk about digital assets and Bitcoin. So the question here is stablecoin businesses like Circle are seeing huge correction. How to think about such lowering yield and euphoria? Okay. So I think if you talk about specific stocks, unfortunately, especially with this in this euphoric market, some of the IPOs, they have seen like 10x kind of returns. Some of them have seen really high returns. So they are not even valued at a point where you can make sense. Like if they're falling 30, 40, 50% after going up by 400%, I don't think that's worth discussing, because this is purely a demand supply game and they are trying to find their real value. So I would not call that huge correction, because it was also unreasonable to see them going up so much, because most of them had no real basis of listing, like Circle or even something like what we have seen, Figma or Circle. All these, they have been priced at way higher valuation than what a typical similar company is valued at in the market. And it was IPO craze. So I would not worry about individual stocks correcting, because they are not really correcting. They are just finding their price. Most of these companies, when the IPO comes out, there are lockups for the earlier investors or private investors. Those lockups expire. You will see that a lot of people are going to start dumping at those valuations, which they did not even expect. Then there are employees lockups which expire over time as these IPOs come out. So I would have to look into what really is the reason into Circle, but I don't want to comment on individual stock. But in general, I think what market is showing us is we have very strong tailwinds. We have very strong, I would say, market performance. If you look at IPOs, they are listing at 5x or 10x sometimes on the day one itself. So I don't think we should, and like we should all be expecting corrections on these stocks, because they have no basis for going up that much. It's pure euphoria built by, and this is more marketing effort, I would say, of IPOs, because once one IPO is successful, everybody thinks it's just easy money. It's purely gambling, and that's what is happening right now in the market. I don't think the stock going up was a good thing, or they cannot correct either. So these are all overvalued stock. Means even if you look at something like, there are a lot of people who are excited about Palantir or some other stocks which are like crazy valuations. Now, yes, some of these things are like, for example, Nvidia you can call, or AMD you can call is crazy valuation, but they are companies which are showing you the growth rates. They're showing you, yes, you can speculate whether that growth will continue or not. But in case some of these companies, like whether you take a Circle or whether you take Palantir or whether you take any of these, some of these are not even justifiable in terms of valuation, even if you consider their growth rates, because their base is too small. They have not reached the levels of Nvidias of the world and AMDs of the world. So it's unfortunate that that is happening, but yeah, that is expected from all these overvalued IPOs. No, but I think I can completely understand people focusing on one or two because of the craze around them. Like I can see that the whole news cycle focuses too much onto these IPOs. I would say look at the bigger picture in the market rather than looking at these individual stocks which are hyped up. Any other questions? Please feel free to type in, or you can unmute yourself as well. Yeah, no, I think overall, again, coming back to the summary, right? Means we talked about AI trade is still pretty much good after the last earnings. By the way, I'm seeing some disturbance on my screen. If you guys please comment if you are seeing any problem with my video or audio, and do let me know. All right. So if no other questions, I will also look into one more thing which I wanted to talk about, is the digital asset treasury companies. So this was one of the questions which has been coming to me very often. And let me share the screen again and we can discuss that. So what is really happening here is, as you can imagine, right? So MicroStrategy is well known by now. Everybody understands it. But now you're seeing using Bitcoin strategy started this, which is now called strategy, which MicroStrategy has renamed itself. And then you have this big company 21, which is still being set up using private money. They are accumulating, they have huge plans. And there is a Japanese company, MetaPlanet, which has a huge plan. And there are a lot of others. These were called BTC. So now this is now the common name, digital asset treasury companies. The reason why now that word is becoming common is because things are moving beyond Bitcoin. Now we are talking about Ethereum, which has started like, pretty big. You may have heard about Sharplink, you have heard about Bitminer, and so on. Solana is starting treasury company. You have every other altcoin, like even Binance, and some of these, like I'm actively working with them. Some of them, like in participating in the initial pipe offerings and so on. And these are pretty interesting ideas. So if you remember, if you were in crypto, you know that every cycle is driven by some new use cases emerging. We had ICOs first, which is now pretty much standardized after all these Genius Acts and the other acts which are coming in. So now I think we haven't even forgotten. ICOs are now not even considered ICOs; they are like standardized. Even we are thinking about the stocks listed in Nasdaq and New York Stock Exchange going into tokenized form. People are talking about companies raising money, the public companies, not even non-crypto companies raising money in a tokenized manner. So ICO was the 2017 cycle. Then we had this whole DeFi, like decentralized finance, smart contract based trading. Then we had the whole NFT and meme coins craze. So there was multiple cycles of crypto. This cycle, we are calling it as a DAT cycle, which is a digital asset treasury company cycle. So every cycle, when we talk about blockchain companies or the crypto market, they find a new use case. And I think this is the exploration of this, and strategy was the creator of it. And now we are seeing it is not just limited to even the companies like Bitcoin, like assets like which are actual store of value, which is Bitcoin, but also everything else which is questionable in terms of store of value. But on the other hand, because of the nature of crypto, which is limited tokens, which everybody has their own tokenomics, everybody has their own ideas around how to build token economics. If you are in crypto world, you know that there is always a justification of scarcity in crypto world. Now, with that, if you can, now the bet there is that you are building a scarcity and you are also generating yield on that token. So if you are anyway going to invest in crypto, why not invest in a treasury company which is going to give you, just like Bitcoin treasury companies are trying to give you per share, they're trying to increase your per share Bitcoin holding. All these treasury companies are trying to achieve the same thing. So this is where I think we are seeing this super cycle of crypto adoption, where not only we are seeing all these tokenized companies getting listed in the market. So all the tokens are now going to be seen as a public listed companies which can be traded. They are going to generate yield of their own. So that creates an economic reason if you really believe in that token. So ultimately, the basis is, of course, that whether you believe in Ethereum, whether you believe in, I'm not going to comment on that. I have made my comments very clear previously that there are a lot of questionable things around all the crypto market. Many of these tokens, including something like Ethereum, which is well known and well respected, there are a lot of unknowns in terms of tokenomics, in terms of why the token will add value, unlike Bitcoin, where it's a very clear logic. It doesn't try to create utility. It's like gold, where there is no utility, you're just accumulating it. Ethereum justifies it by stablecoin adoption or smart contract adoption while it cannot scale. Solana tries to say that because Ethereum cannot scale, we can do it on Solana. But the questions here is that, again, I'm not going to comment on whether they are valid or not, but what I can tell you is, now what is this creating an opportunity? As an opportunity, what it is creating is now you have all these cryptos which you don't have to invest directly. You can invest in treasury companies which also have options enabled, which have a lot of hedging parameters. There is a lot of volatility. So as we discuss, and if you are part of Proflex, you know that we are pretty big on options and so on. This provides you a risk-free opportunity to ride crypto. So rather than investing into a token like Ethereum or a Binance token or a Tron or all these, if you are really interested in them, why not go into a treasury company which will have options enabled, which will allow you to not only hedge but also milk the volatility? And the volatility here are 100%, 200%, 500%, because the underlying token themselves were very volatile. What is happening is, for people who are in this market of, like similar to us, like when we build strategies on Proflex, we don't rely on directional trades, we rely on how the volatility gives us opportunity to make money weekly. Bitcoin, unfortunately, is becoming less and less volatile. So we are definitely interested in all these things. And I'm personally, like, even outside what as an advisory in Proflex, we are also personally, I participate in some of these deals. But basic idea here is that we are in a super cycle, crypto super cycle. Just like we had DeFi super cycle, we had a NFT super cycle, before that ICO super cycle. We are in a digital asset treasury company super cycle. And even if you look at some of these newer treasury companies like Ethereum, they are growing faster than what strategy did for Bitcoin. So there is I can completely understand, and I myself am not convinced that Ethereum is going to be the big deal in terms of treasury asset. But on the other hand, market is showing the enthusiasm. You are seeing that what took 6 months for strategy to achieve, that level has been achieved by something like a Bitmine, which is led by Tom Lee because of his whole presence. It has achieved that in less than a month. So the excitement for these treasury companies is definitely building. So we cannot just say that it is not going to happen. On the other hand, whether it is worth it at a core level for a long term, I don't know. What I know is that these volatility in this stock is good enough if you want to play, and if you're invested in the underlying asset, there is a merit to investing in these treasury companies rather than investing in the token, just because you can do hedging better, you can do more income generation beyond just buying a token and hoping that it will do better. So that is one view which we have. And if you see now things are going down the value chain, means you may not even have heard of these tokens like IP token, which is a AI based crypto token, and they're trying to this is not even a well-known top 10 top 20 token. And if you see who are investing in this, means it's crazy that you are getting A16Z and all these big VCs are putting in a huge amount of money into these. So what I'm trying to highlight here is that being totally, either you can be super early, you can say either these VCs have done their due diligence and they're super early and they really believe that all the crypto can be brought into this kind of a pipe structure into equity world, and all of the crypto has a merit. Or we can just sit and let them fail. Either way, what I'm trying to highlight here is it's happening. It means whether we believe in it or not, or whether you believe it or not. Yes, I have bias towards that Bitcoin is proven over the last 10, 15 years. Ethereum is probably older, but now we are talking about something like IP token, which did not even exist in last cycle. Even that is being created as a token reserve. Even that is going, SPAC route and getting listed on NASDAQ. So you can imagine that what is the craze about it and what is going on here. So that is, I think, overall, I just wanted to highlight what is going on in treasury companies. I would be saying, because of my history in this world, and understanding this world, I can completely understand that some of them will get towards excessive status where we are saying these have no meaning. It doesn't really make sense. Like, for example, recently this came out that Justin Sun, who is a Tron founder, he owns, like, he declared in a public filing that he had some 70 to 80% ownership of Tron token as an individual. And imagine a treasury company which is buying tokens in the market. What is the store of value if one person can dump 70, 80% of the tokens? So now you need to really understand how much of bad quality tokens can come into the system. So there will be a lot of fraud. There will be a lot of unreasonable, wrong companies being listed. And that is where I would say we have to be careful. But if you have done your due diligence, and if you're interested in a project in crypto, I would say it's not a bad idea to invest into treasury companies as long as you understand what you're doing. But again, as I said, the safest thing right now is that Bitcoin is still cream of the thing, and the treasury companies on Bitcoin are really going a different route, because now we are talking about states, we are talking about companies which are high quality. They are doing this. So that's where the whole spectrum is today.
As thinking of each treasury company token system, just like the DeFi summer, as a black box, the retail money and the VC money comes in fiat, and that's what really builds the system up. And when those two sources slow down, then it becomes a big problem. And then basically that was the reason for all the DeFi yield farming collapse. In the treasury company case, while there is scarcity in each token being a limited supply, whether we agree with it or not, because these are all proof of stake tokens, there is no barrier to spinning up a competing token. And it's not like multiple treasury companies are competing for the same token for the scarcity. Just like Bitcoin, for example, there is actually a single scarce 21 million supply source. There is no alternative to it in terms of the model for the treasury company. My worry is that right now the companies are finding it pretty easy to raise the money. This just like think of it as a VC money coming in. That kind of creates the hype. It goes up. But then when the VC money runs out or the monetary conditions tighten or there is a liquidation in the broader market and people have to sell what they can, not what they want to, that could take the air out of the sails, wind out of the sails of all these non-Bitcoin and maybe non-Ethereum treasury companies. That's my worry. Do you have any thoughts about that? Because
sure.
Yeah, go ahead.
No, I think perfectly correct. So there are two things which you're talking about. So one is this is a layer on top of what is happening. So what are these treasury companies doing? First of all, let's understand that what they're doing is there used to be a crypto world where you go to Coinbase, you buy a token. Even Bitcoin was not available before ETFs came in. So MST, by the way, you need to remember that MSTR or MicroStrategy was before Bitcoin ETF. There was no other way to invest in a stock market other than MicroStrategy before ETFs came in, or maybe GBTC was another one, which was a trust fund, which was quoting a discount. MicroStrategy saw that opportunity. They created a wrapped, think of it as a wrapped, accelerated investment into Bitcoin. So there are two pieces to it. One is that crypto token having its own value. So you are saying yes, those crypto tokens are, means you can have belief in it, or you can say I don't believe in it. But there is an investor class which believes in it. This is why that token exists and that has certain market cap. That's why it's quoting at a certain value. What these DAT companies are doing is they're just wrapping it up into a leverage model where they're creating a store of that. So it automatically creates demand. Now you are basically bringing the debt money, which is basically feeling safer because they are putting at a secure layer. The token has to fall 80%, 60%, 70% to even have that debt money at risk. So now you're using what Michael Saylor has opened up, what strategy has opened up is that every crypto token is seeing this free money coming in from a debt thing where the risk is taken by the equity owner. And now there are speculators. Ultimately, crypto was a speculation tool. When you talk about, like people were betting on something being hundreds of billions of dollars worth of valuation, like Ethereum, where the real market or real usage, if you talk about, in the standard valuation terms, the business being done on top of Ethereum was not big enough. It was pure speculation. Bitcoin is totally different. You're right, because it's not competing for adoption. It's a pure gold story. And it has separated itself that they don't care. Like anybody who believes in Bitcoin does not have to worry about whether Bitcoin is used or not. It's all about, just like gold is not used. Means ideally, based on usage, silver should be valued more than gold. But that's not true because gold has been identified as the money. Similarly, Bitcoin has been identified as the digital money. Now, everybody else is just using this opportunity and this, we call it gold rush of crypto treasury companies. And you're right that most of these will dry out at one point when they have captured the market. The question is whether have they captured the market, whether what percentage of the available capital which wants to come into crypto, or forget about crypto, right? The debt people who are coming in on top, they are not even betting on crypto. They're saying crypto is a trend. Maybe it will crash by 50-60% one more time, but I'm safe because I'm the senior debt on top of this. But the people who are buying the stock, they are taking the maximum risk. But on the other hand, like people like us, how we think is, if you know how to risk manage, if you know how to hedge it, there is a story to be played here. Means why would you bet on something like a Palantir or a AMD even with the valuation they had? Means we never, even though we believe in the story, this always exists. The stock market always gives you crazy stories where they're always overvalued. Nobody talks about them, money running out for them, because yes, money does run out even for them and they crash big time. We have seen those. So that will happen. But the benefit here, what I'm trying to highlight is because of the hedging available, which was not there in crypto world, it totally changes the game. It makes it possible for institutional investors and for sophisticated investors to go invest into these without worrying about whether there is a base case or not, whether there is really demand for that token. Yes, they will die down at one point, But if you can hedge it, if you can make strategies around it, you can still make a lot of money. And that's what institutions are doing right now. Does it make sense?
Yeah, it does make sense. And that's where actually my point about the source of fiat comes in, because fiat has to continue coming in as a stream. And for DeFi, we saw that clearly once the VC money ran out and the retail dollars were all in, then there was nowhere to go. And my sort of question about these treasury companies is that where is that fiat going to come in to sustain it? And if it is a story that's going to deflate, like DeFi summer deflated in a few months, what kind of a legs does this one have? So I'm a very conservative investor, so I don't want to discourage anyone, but I kind of think out loudly in these.
No, I think that makes sense. And let me put it this way, right? Means remember one thing. Means I'm in this world for a very long time, whether it's stock market, whether it's crypto. Uh, it's a I have seen people being purists. I have seen people being, very much like I think this is a scam and other thing is not a scam. My point is very simple. Why is Figma not a scam? Like, how does it make sense? Why is Palantir not a scam? So it's not just crypto, right? Means the valuations and insane craziness about a stock, it becomes gambling beyond a point. And when you look at how Figma went, and I think earlier in this call the question was about Circle. Means it did not make any sense. If you really go deep down, Circle had no reason to be at $200 to $50. Means it's actually not even worth $50. Means forget about that. My point is, if Circle is at $200, why Coinbase is not at $1,000? Because 75% of revenue of Circle goes to Coinbase. So there are a lot of problems in the market. Let's not even worry about where the fiat is going to come from. Means we are living in a gambler's world. We are living in it's not only crypto specific problem. Like we all know GME story. We all know all the other stories which have been happening in last 4 or 5 years, ever since Robinhood has come and given the stocks in the hand of teenagers and anybody who can go bet on it on options and in a leveraged manner. I think we are living in a excess capital world which wants free and fast money. So crypto is just one part of the story. So now we can always argue about that. Means yes, some people believe Bitcoin is the real story, Ethereum is the real story, and others are not. You draw your line. Some people draw the line only at Bitcoin, like you are doing. Means some people will draw the line below Ethereum, and some people will go all the way to next 100 tokens. Similarly, in the stock market, you can draw your line at Nvidia and only the top Mag 7, or you can go, and a lot of people love trading penny stocks. So it's all about how you build your strategies. As we always say, in stock market there are millions of ways to make money and billions to lose. So it's a matter of you finding your one good way, and if you can make a story for yourself, that's all it takes. Means you don't have to be the best at knowing everything. It's a matter of finding one trading strategy which works for you. The reason why we like what is happening is because we have seen this world play out. I have been involved in crypto industry. I'm excited about what is happening here just because there is a merit to blockchain. There is a merit to many of these tokens in ideal world, which is means I was disappointed after the last cycle that blockchain did not happen. Right? Means a lot of these tokens have a story to tell, and a lot of things are blockchain is better at, like in terms of transparency, in terms of how you can issue capital and so on. But on the other hand, what we realize is ultimately it becomes a gambling zone, right? And ultimately, there was no, like, some of these tokens issued were managed by VCs. There were undeclared wallets. There were a lot of tokens issued which were not clear on how they are getting these tokens, and that created basically it's a corruption which comes into every domain. So there are some believers, some are not. But I'm going to say that there is no reason to say that you cannot make money with, like, especially when you bring into stock market. And we at Proflex, we have done so much of options. We have done so much of hedging. Like, we always take trades. If you go to our advisory, if you're in all access, many of you are, you will understand that we play with options. Now, when you have a risk that gets quantified in the stock market using options, and when you look at the professional people, they don't take risk of underlying asset. They take risks of only what market is giving you. You can always hedge your risks. You can always trade options around them, and all these are becoming very exciting products for us, because when you look at 200, 300 IVs, we see free money there. We see weekly money coming into our pockets rather than worrying about whether Ethereum will succeed or not. So that's where I think it gets exciting as an investor. I'm not, as I say, as you are perfectly right, I'm not suggesting that any of these have legs forever. It's built on a basic scheme of, more and more money coming in every day, which may not happen. One day the money will dry up. Except for, of course, as we all believe in, like, the Bitcoin has shown, and by the way, it's not mandatory that Bitcoin will not have another crash. Means it can also have 50, 60% crash. And that's a demand supply problem, right? That's going to happen one day or other. But the point here is that same thing has happened for NVIDIA. Same thing has happened for AMD. Like AMD dropped 70% in last 12 months. So this is not correct to point out at one industry or one kind of asset class that they are worse over others just because they crash. Means GME was a perfect example, or even let's not go into those meme stocks, but let's I'm talking about AMDs and NVIDIAs of the world. They have at any point in, if you look at the history, they have dropped by 50, 60, 70%. So it's not unheard of. So it's all about how you risk manage and how you define your own strategy. And by the way, means even something like Meta, means I still remember that we had Meta at $100 recently, like after going to 400 plus. Means I know so many people calling me because I used to be big on Meta 10 years ago, and all those old people whom I used to work with, they were just calling me on what do we do? Like this is now it's a solid company. We're talking about the leader in social media and so on. It's not very long back. It happened just, I think, 2 or 3 years ago when it dropped 75%. So if people tell you that crypto is bad because there are crashes happening of 70, 80%, I'm talking about Mag 7 companies which have dropped by 70, 80%. So just calling somebody irresponsible with their money is not the right way. Means everybody has their own reasons to bet on something or others. And in modern world, money flow works like that everything goes into excess and everything goes through a cycle, whether it's up or down. And anything can happen with any asset class. So you cannot feel protected just because you are in a Mag 7 stock versus you are in some kind of a penny stock or a crypto token. Nothing has shown you stability these days. Like anything can drop huge amounts. And people believe in Tesla, and that has dropped like 60, 70% even this year at one point. So I can give you hundreds of examples of big companies which almost everybody invests in, that they're not behaving very different in the modern world from crypto markets.
Thank you. That was actually a really good explanation. I have another question which kind of connects to the wider investment world. We know there are market watchers, some really well-educated ones who are ringing the alarm. Some of them been sounding the alarm for more than like 5 years now. More prominent writers are now saying, "Oh, this bubble is getting scary," but no one knows when it's going to pop. And with the dot-com boom memories, I kind of don't feel that the sentiment is so intense right now, the mania, that we are near a top right now. Is it because there has been so much easy money and they're still printing so much money, so much deficit spending? We are in fiscal dominance. Central bankers have really lost control of their monetary policies. That the bubble top this time might be much more intense or much bigger than we feel, and these more long-term market watchers feel. What are your thoughts on those?
Yeah, so my thoughts are very simple on that. Like, let me say, I've said it many times. There are two things to look at when we talk about dot-com crash or 2008 crash or anything. Just look at the top and then the crash, and look at where we are today. Every new top is always 3, 4, 5x of the previous top. And the reason being very simple, that yes, market will go through the cycles of deep corrections, because the pace of money creation and the pace of concentrated investments into very few assets is changing. And let me tell you, it's not very difficult to explain. 20 years ago, market was very local. Like there was no way an Indian or a Korean or a Chinese could easily invest into US market, even though dot-com market was booming. Today, when I go and look at Economic Times in India, they're still talking about NVIDIA, this happened, AMD, this happened. Like every Indian has access to AMD or Nvidia stock, or every Chinese or like Hong Kong person, or China, it's a more controlled, but let's say Hong Kong person or a Korea person, everybody has access to US stock markets. So things are becoming more and more concentrated. And money supply, yes, you're right, means global money is coming into US stock, not just US money, right? Even if US tightens the money, if China is accelerating, or Japan is printing money, all of that is ultimately traveling to the same assets. Because as we say, right, means we did talk about it in our investor day last time. The US is the place of innovation. When we talked about how 75% of the data center capacity is in US. Like, US is leading in AI. US has always been leading in internet companies, whether it is Google, Microsoft. So when you have the innovation, when you have, and especially in what is happening in modern world, one is the ability to invest globally. Second thing is the information is now very much polarized. You go to your same Instagram and same Twitter and same information flow is going to every person in the world, whether you are in a small village in India or whether you are in Silicon Valley. You don't have any information advantage. So everybody knows NVIDIA is the leader in AI. So everybody will invest in NVIDIA. So all I'm trying to say here is that there is no easy way for you to tell whether valuations is more if the money is still being printed, if money is still available at a global level. And it's not about US phenomenon. It's a matter of like why Bitcoin is so big, because now we are seeing treasury companies coming in, UK, Singapore, Brazil. Everybody is putting money after MicroStrategy. Like, it's not that it's a local US phenomenon that MicroStrategy did this deal and everybody's doing it. Same way, when you see AI companies, everybody knows that right now we are in this two big gold rushes. One is AI, one is Bitcoin, and so on. So you will see these particular asset classes, they have no top, because as more and more money become available, they can absorb more and more money. Of course, the stories will change one day. One day, NVIDIA will come back and say, sorry, we are not growing at 70%. We are growing at 10% only next quarter or next year. People will ask those questions whether the valuations are worth it or not. And that also will travel far. And immediately people will start dumping. So that's why your moves are bigger. When DeepSeek came, NVIDIA dumped by unreasonable levels in January just this year. It's not a very old story. Now we are enjoying this 180 plus NVIDIA, but NVIDIA was at $85 just this year. So what I'm trying to highlight here is that moves are bigger because of social media, because of global access to the same stocks. So everything moves bigger now because everybody is investing in the same things, unfortunately. And this is why, and I think one of my team members was sharing me this chart that when the railroads were the craze, 63% of the market cap of S&P 500 was in railroads. Today, some analysts are showing you 38% in Mag 7, which are not even same industry. Like Max, you're talking about social media, you're talking about cloud companies, you're talking about, like, Mag 7 is not one industry. Mag 7 is multiple industries. But in one point in history, 63% of S&P market cap was in railroads. So even you look at historically, there is no limit to access. We can go into access where 80% of the market cap is in Mag 7. Why 38%? When these companies are ruling the world, why 38% is too much? There is no reason. When historically we have seen railroad craze, we have seen, like, we can always pick and choose data points to justify your point of view. I always say that in finance world, it's very easy to present both sides. I can give you another data point and show you how it is insane valuation, and I can show you another data point and show how we are way far away from historically high valuations. So nobody knows. It's a matter of your bias, and you pick your data and you show your data. This is why, means, we have always been promoting, and Proflex strategy is very simple. Always go with the mindset you don't know. You don't know what is happening next week. This is why we talk about hedging, we talk about building a strategy where you always ask yourself whether you are too biased on one direction. You start wishing, you start hoping. When you're investing with a mindset that we are at the top, you will never make money, because you will always look to when do I sell. But you don't know, market can go another 50% up. So you're right. Means it can be accessed right now, or it can be accessed in 2 years from now. Nobody knows, and that's why we always talk about make a plan for both sides. That's when you're investing. Otherwise, you're speculating. Otherwise, you should just give it to professionals, or just do passive investing with the ETFs and whatnot. If you are really actively trading, you should always be ready for unknowns, and that's why we are a big promoter of options and hedging and so on. That we don't believe in making directional calls without a plan for what happens next month if it crashes by 50%. And by the way, this is one more thing which I would like to highlight before we close. I think we are at the top of the hour. Like as we are expanding our advisory service, and mostly most of our clients are Silicon Valley. What I'm realizing is these are, as I talk to more and more individuals and more high net worth individuals in the area, I realize that 70, 80, 90% of the income is concentrated in one stock, like because of, RSUs or whatever reasons. People have huge built up of single stock. Now imagine if you are, going through this cycle where you may believe in your company, but nobody knows the future. Nobody knows 3 months down the line, suddenly the money flow shifts and your stock crashes by 60, 70%. As I gave you examples, in Nvidia happened right in this year. Meta happened 2 years ago. Whether it's any stock you pick, volatility is huge when the market crashes. Now, this is what worries me for people who are relying on just one stock and their net worth is stuck to one stock. Now that can really impact you. So we do recommend people to look into. Means we are helping some of these clients already in terms of building a plan for them of diversifying into other stocks where they can do options. Because unfortunately, when you are working with the same company where you earned your RSU, if you never moved out, you cannot even sell options because companies restrict you from speculating on them with options. You cannot do margin trading on them. So there are a lot of scenarios we are dealing with, and this is one thing which we are probably going to have an event soon. We usually do our quarterly event as a Proflex Investor Day. So this is going to be one of the topics. But my basic idea here is do talk to us because we are already helping some clients, and especially when people are concerned about whether it's a top or so on, it can be even more stressful. Because when you are in the excess, while I strongly believe that markets only go up, maybe in 5 years, 10 years from now, you don't have to worry. Any stock you own today, which is a solid company, will only be up in 10 years from now. But there's a lot of time between that, right? So if you have a dot-com style bust or if you're 2008 style bust, it may take maybe 4 years, 5 years, or 10 years to reach the same levels again. And you do not want to take risks, then you need to have a plan. And that's what we do at Proflex, right? With the options, with the hedging and so on. So feel free to reach out to us. This is what we do this is my personal purpose also. Like when I talk to people, I realize how much help we are able to give people on just making it a peace of mind, right? Where you say we don't care about direction of the market, and that is my biggest learning in last 20, 25 years in this market, that nobody knows. I mean, if somebody is telling you that this is the top or this is the bottom, they're just fooling you. They are just hoping that they are right and they can take the claim. I would see we always look at both sides of the market. We, of course, as I said, that we should look at tailwinds. We can be more confident in one direction over other, but we can never be sure. And if you need to be sure about your investments, you need to have a plan rather than just hope. And that's always I say that never go with the hope, always go with the plan. So that is the message for, I think, just to think about, because I think we are already at 5 p.m. So thanks everyone for staying here on this call and through all the technical glitches today. But let's continue this discussion. Feel free to, I think, use our WhatsApp channel, which is, I think, mostly we are seeing pretty active, but feel free to put these kind of questions. You don't have to wait for the weekly call. Sometimes we don't have this call also. But my goal here is to build a community because we are all local mostly. We are all in Bay Area. Means also we use these events, but we should build more knowledgeable community where we are helping each other on what we learn. That is the main goal of this kind of a public group. Of course, we have our own services, but I think the public group, our goal is to build more knowledgeable people who have a plan and not just relying on the traditional finance world, which is going with hypes, whether it's upside hype or a downside hype that markets are going to crash. Means this is what we were doing in April, right? Means when there was doom and gloom, I was always talking about there is a world beyond April. That is just a short-term dip. Same thing, I would say it's very likely that there will be another April. There is very likely there will be another deep kind of a moment for AI. It's very likely all these things will happen in next 6 months itself. It's about making a plan beyond that 6 months, or making a plan for how do you deal with them rather than reacting to it. Because I was very sorry to hear a few people who came into our advisory who told me that in April they just panicked and they sold a lot of their stock at losses. So that was, and this stays back with them, right? This really creates a big problem when you're selling your huge part of your net worth on one panic day. And this is where I think this drives me when we are building our advisory or any other services. We say that we can help make a plan for you rather than just you doing these reactive things in the market, because it's common. Like, it's very difficult to go through that moment when you have 70% or 80% of your net worth crashing down on a single day. I can completely understand that. I mean, it's nothing to blame those people that they are not smart or anything. It's a matter of what happens, like, to humans at an emotional level. So this is what we strive to do as Proflex, is to build that knowledge base where you are saying that you're not reacting, you are mentally prepared. Means it's almost like insuring yourself, right? Means when we buy life insurance, we are, or nobody's saying that you want to think about dying, but you are thinking about your family and insuring your family. Same way, you should think about money is a big part of that, and your net worth and your stocks are a big part of it. So you should think about insuring them, and that's what we do at Proflex, right? Means if you are in advisory, you already know it, that we hedge it. We are 100% covered always, and we look at both side scenarios, and we are happy to discuss more. Just wanted to say that because this question keep coming every day, that we are sitting on high valuation. What if this happens? And yes, that will happen one day. It will happen that your stock will fall 30%, 40%. Just have a plan. That's all we can say. Again, have a good weekend, guys. We are over the time, so thank you for staying back. Let's talk next week again. Bye bye.